How do you view this through an investor lens? This, again, Israeli strike on Iran is being called limited. We're told no major damage so far. However, we have not heard from the IDF as of yet, and we're actually expecting to hear from the Secretary of State later this morning at about 6:30 Eastern time. But I do want to get your sense through an investor's lens. How do you view this?
Now, despite the fear that a lot of folks are living under right now, as an investor, this is one of those things that the market tends to shrug off. Right, this isn't going to immediately impact earnings that we're going to continue to hear about. It doesn't fundamentally change the direction of the U.S. real or financial economy. So, like most global macro events, they make great headlines. But, if you look out 10, 15, 20 trading days from now, markets tend to just power on based on other factors. And I think this will fall into that same category. Less some volatility around oil and gold and a handful of headline haven assets over the next day or so.
Okay, I think you're hitting on my next question. We saw a spike in certain commodities, oil and gold being two of the highlight ones there. Is right now a time to possibly invest in those commodities with the expectation that these tensions might rise, or at least, the sensitivity to these tensions appears to have risen after we saw oil jump about 3%, even though it has normalized now?
We talked about gold last time you and I were together, and I still think gold has got some upward momentum to it, so it makes sense to continue to hold on to that. Oil, is a tough asset class to play. I think the trend has certainly been to $100 a barrel and maybe then some. I doubt 150 is our end barrier, but this will continue to add to the strain that has already been plaguing the oil supply for some time. But I don't think this is the one item that forces it through a breakout and to stay there.
Got you. I just want to stick on the oil theme just for a minute. Oil is one of the factors that not only the ECB is weighing, but also the Fed when it comes to inflation. What do you make of John Williams putting on the table, saying it's not his base case, but he put it on the table that we could see a rate hike? The oil market, do you think that's, with these geopolitical tensions, is that something that's going to possibly delay that ECB cut and maybe even delay the Fed cut even further?
I think it's a good factor to delay both ECB and the Fed's desires to cut rates. I don't think it'll be the only factor. It certainly will be a convenient one that will make folks understand what they're up to. But I think there will be larger other driving factors in the U.S. in particular, likely to be housing and some other inflationary measures beyond just energy prices that are going to force that cut to be held off till well into this year. And although I wasn't in this camp 3 weeks ago, maybe no cut at all this year, assuming they can find a way to stick the landing with their narrative.